Hello, everyone. Thanks for joining us in this session of the Fraud Fighters Virtual Summit. So you want to be a sponsor bank? What the last 6 months of regulatory scrutiny tells us about how to build a BaaS program. I'm Russ Warnloff, Marketing Director at Unit 21. Before we get started, I've got just a couple quick housekeeping reminders. First, this session is being recorded and will be available here on this page immediately after the session concludes. And second, because this session is only 30 minutes, unfortunately, we won't have dedicated time for Q&A, but I encourage everyone to use the Q&A box if you have any questions on the topics that we chat through, and we're going to do our best to answer them as they come in throughout today's session. So with that, I am really happy and excited to introduce today's panel. Definitely an all-star team here with multiple perspectives on this topic. Given the time constraints here, I'm going to force us to just kind of give a lightning round introductions, couple lines on who you are, what you do, what your background is. Let's go left to right. Sarah Beth, why don't you kick us off?
Great. Thanks for having me. My name is Sarah Beth Felix. I've been in sanctions and AML specifically almost 23 years. I work with banks, fintechs throughout the world to try to avoid being in the news, if you know what I mean, in a bad way. And I'm just really happy to be here.
Awesome. Well, we're happy to have you. Sheetal, why don't you next?
Thanks, Ross. Thanks also for having me. I'm Sheetal Parikh, the General Counsel and Chief Compliance Officer at Treasury Prime. And for those of you who don't know what Treasury Prime is, we are a software technology company that help banks and fintechs connect to our APIs.
Wonderful. Thank you, Sheetal. Keith, how about you?
Yeah, thanks, Ross. I'm excited to be here. I'm excited to be here with Sarah Beth, Sheetal, and Sandra. I lead the payments team at Cross River. I've been here 4.5 years. Prior to Cross River, I was at American Express, and then prior to American Express was with First Data and Western Union. So I've been in payments a little bit less than 20 years.
Wonderful. Thanks, Keith. Sandy.
Hi, I'm Sandy Asparelli. I am a fraud analyst at Patriot Bank. I have over 15 years experience in the payments industry with both fintechs and BaaS model type programs.
Wonderful. Thanks, Andy. And last but not least, my esteemed colleague, Jeremy Beaudry. Jeremy, I'm going to hand it off to you to run today's conversation. Break a leg, everyone.
Thank you. I was not lucky enough to be one of the pretty faces in the circles, but we can move on from that. I'm Jeremy Beaudry. I'm the strategic account manager here at Unit 21. My background is in compliance and also serving as corporate counsel before starting my career here at Unit 21. So hello and welcome to the webinar, and thank you for the panelists for joining me today. Since we only have 30 minutes, let's move forward and do it. Before we dive into the specific areas, I'd like to get some quick takes though on important questions impacting the industry, similar to like Mad Money's lightning round. Each of the panelists here are going to have about 10 to 30 seconds to provide their take and on some of the questions that we're going to move that we have here. And in the event that you go over, I'm going to just spam you and make sure that the next person has enough time to offer their 2 cents and so on. So with the first question concerning, and it's no surprise that we're going to be talking about this, but concerning the Synapse fallout, can you put your hindsight hat on and provide 1 to 2 items that they could have done differently? And it could be Synapse or their bank partners, whatever. Let's start off with Keith.
Yes, starting off with the doozy here, Jeremy. In 10 to 30 seconds, I will speak more from a banking perspective because we are a bank. We did look at Synapse. We never got comfortable with the model that they were operating under, being that one additional step removed from the end customer is a challenge. To speculate if I was at Synapse, what I would have done differently. I think the focus on data both with a middleware provider and at a bank is important to understand what is happening. So just speculation here, but I think a better handle on the data with both Synops and their partner banks would have helped.
Awesome. And Sheetal?
I think from what we know from all the public documents and articles out there, I think the two main themes are reconciliation, persistent issues of reconciliation between the bank and Synops. And then I think it's also the way their architecture and account structures were. It seems like they had everything in one single omnibus FBO account.
Awesome. And Sarah Beth?
I think from an AML and sanctions perspective, there were a lot of assumptions made from the bank partner, and we see that in the order. There were, I think probably reasonable assumptions, having been in a few meetings very similarly regarding middleware, that I think banks, when they're really hungry and they want to scale this quickly, they tend to go, okay, great, I can offset that AML or sanctions risk, right? I still own it, but someone else is going to help me with it. And I think that was the incorrect view of that middleware partner. And for me, that was probably one of the biggest issues that I saw. And I think one of the more costly issues as well.
Awesome. And Sandy?
I agree with both Keith and Sheetal, and it's all about the data and bringing the data in-house, because oftentimes sponsor banks just lose sight of the data and the oversight process.
All right. Well, thank you for your takes on that. And what about regulatory actions? So regulators are taking more enforcement actions against banks in embedded banking. We know the bank owns a risk. However, in a different universe where fintechs could be the risk owners, have you seen some fintechs that cause problems, irrespective of the banks, and ones that possibly have done it right? You don't have to name the names specifically, but maybe just the products, or if you want to name names, sure. And let's move forward. Sandy first.
Sure. So, of course, fintechs, they are doing it right, and many are doing it wrong. But as the whole fallout has shown us, there is no safety net for customers that are hanging out underneath these fintechs. And maybe they just don't understand that. But there is no FDIC insurance for these customers. So they're the ones who lose in the end of it.
Yeah, you're definitely right there. And Sarah Beth?
I think we probably won't see true change in this unless we start closing some of the loopholes that I'm very vocal about closing at the FinCEN level for a lot of fintechs and payment companies. But I think until that day happens, which I don't know if that's going to happen, I think it's important that fintechs early on in their tech stack, they really try to integrate the importance of data availability and data hierarchy, because it has a direct impact on AML and sanctions. So the ones that are doing it right are the ones that are having these experts brought in, or they're hiring experts in-house to help them focus on sanctions and AML compliance.
All right. And Sheetal?
Yeah, I mean, I come at it from a slightly different vantage point. I absolutely think there are fintechs that are doing this very responsibly. And in fact, the sheer fact that we have proliferation in this space is because there are gaps that these fintechs are filling, that traditional banks and financial institutions are not serving a certain segment of the population. So for sure, there are fintechs that are doing this properly. There are obviously just as many fintechs that are probably not, adhering to their responsibility. So I think it's about responsible innovation and really just understanding that this is a very highly regulated space.
Mm-hmm. Yep. And Keith?
Yeah, I mean, Sheetal touched on innovation, and that's what fintechs provide. And we want to encourage fintechs to continually innovate in financial services. And there's many good ones. There are some bad ones. I would say the good ones, Sarah Beth touched on this, having expertise specifically in BSA AML is very important, right? You need to hire experts in BSA AML within the fintech and have bank level BSA AML compliance within the fintech. And have independence of that BSAML officer relative to the rest of the organization.
Okay. Yep. Thanks for that information. And this is probably more of a hot button issue that gets some degree of noise here and there, but I don't think a lot of people like to discuss this. Are bank boards unaware or are they too aggressive, or are their heads in the sand when it comes to implementing a proper BaaS program? So with that, Sheetal, sorry.
No, I think it's hard to kind of couch all banks in, make them all equal. I think there are certain boards of banks that are being very thoughtful and deliberate in how they're setting up programs and even thinking about getting into the space. And I think there are some bank boards that maybe haven't put as much thought into it. And I think that's what we're seeing play out with the consent orders.
Keith?
Yeah, you can't put all banks in the same bucket, but our bank board is. I think Cross River is maybe in a unique position in that this is kind of all we do. We've been in this space for a very long time, and so if you're on the board of Cross River, you expect to be deeply involved, and they are. So I recognize that all banks aren't. There's many other business units within other banks, but fintech banking is more or less all that we do. So it's very important to us, and our board is very involved.
Good. Glad to hear. And Sandy?
I mean, I guess you can consider it to be that their heads are in the sand, because maybe they're just only hearing what is being presented to them, and they're seeing passing exams all along and thinking all is good until it's not. They've had no material changes, and then all of a sudden they're in trouble, and now they want an explanation.
Mm-hmm. Yep, I've seen that a couple times where introducing a new BaaS program is like just opening up a checking account for 80-plus-year-olds. It's the same risk. And one quick question just for everybody: if embedded banking wishes to flourish correctly, provide one way to execute that wish. Keith, let's start off with you.
I think technology, there's a lot more many players in the space can leverage from a technology perspective. And by technology, I think very specifically ledgering capabilities, subledgers.
Okay, awesome. And Sheetal.
Yeah, I mean, I think it goes back to kind of the theme, and Keith, I think, touched on this, is this idea of innovation, but being responsible. And what that means, I think, for all participants in the ecosystem is making sure there is a level of diligence on the part of banks and also on the part of tech companies, knowing who you're working with, and then being able to address risks through controls and having controls built in through the technology.
And Sarah Beth.
I think it comes down to a large part of it because of our nascent regulatory framework in the AML space specifically, not in the consumer protection space. I think it comes down to both parties, both the fintechs of the world and the bank partners of the world, putting on that mind of a criminal and figuring out how threats and vulnerabilities are part of their tech stack, part of their ingenuity, which is great, but how will a criminal really exploit their products and services? And the bank also has to do that. And I think that's really the only way forward, where we stop seeing all these consent orders. I'm tired of having to do this every week. And I think it all comes back to understanding how a criminal can really make use of your products and services as a fintech, and then a bank doing that to the fintech as well.
And Sandy.
I'm going to take the unpopular opinion here, but what about fintechs were regulated just like banks? They would have more skin in the game and can be put on a consent order just like a bank.
Mm-hmm. Yeah, I definitely think that's a option that should be in the regulators' just war chest. Whether or not they want to go forward with it, I think it's going to present some challenges to banks to try to be as competitive, but ultimately I think it's good for the industry to make sure that they're going to be outside or get outside of the current enforcement action space. So with thank you everybody for offering your take on some of the hot topics. But with that, we wanted to focus on the key areas with the webinar, which is, we know that BaaS is a long-term investment with significant upfront costs. Sarah Beth, how do you see this as fundamental for sponsor banks?
Well, I've long said that boards have to be comfortable being in the red. I think a lot of times boards just kind of assume that they'll out of the gate be, in the black. And I think, the same approach that we took with cannabis banking, a decade ago, really has to be the same type of mindset on this. I think there's some basic questions that the AML officer at the bank side really needs to have those discussions with the board. One of the things when boards bring me in, my first question I ask them is, are you comfortable banking foreign financial institutions? And if their answer is no, that's too risky, then to me, that's a sign that they're not ready to be in BaaS. Because at least you're dealing with a fully regulated financial institution. And like I've long lobbied for, our nascent regulatory framework, we have no AML, we have 4 loopholes under FinCEN. And so if a board is okay banking a fintech, but they're not okay banking a foreign financial institution, I think that's something that's like a heads up. And while it can be a great long-term investment, if they aren't comfortable in the gray space there, then they're certainly not going to be comfortable when we're dealing with unregulated, partially regulated fintechs in that space. So I think boards need to be ready, being in the red, eventually getting to the black. Also, we're seeing a lot, regardless of whether or not banks are in BaaS or not, they have to have somebody on the board with some type of AML sanctions knowledge. That is now becoming a have to. It's the same drum that each of our federal regulatory agencies are beating.
And anybody else wanted to add in a couple of points there?
I mean, I think the other thing to keep in mind as well is for a lot of these community and regional banks, if they don't find a way to innovate and partner with tech firms and to do it in a responsible way, they will become irrelevant. A lot of these community banks won't survive. And so it's not necessarily binary. It's not going to be an either or proposition. There may come a time where if we're choosing to invest, a lot of the smaller community regional banks are going to have to make an investment in order to stay alive.
Yep.
I think you need to if it's not going to be the core to what you're doing as a bank, you need to be very cautious, move slowly. Don't expect, I mean, Sarah Beth kind of touched on be in the red, but don't expect a ton of growth right away. If you're growing too fast, that would be a major concern because it's hard to control growth from a BSAML perspective. Like you need to be able to ensure that you're growing at a pace that you can scale up your compliance functionality.
Yep, I agree. And to our next question, though, is when you're assessing AML vulnerabilities before adding third-party risks, Sarah Beth, where do you think could be the disconnect there?
Well, I would say fresh off of the last week and a half of talking to a handful of banks that are getting into this space, the thing that I keep finding is that they're not staffing appropriately ahead of time. And I can't believe we're still having this conversation because, I mean, we've had the exam manual for 20 years almost. And, I think a lot of times that's already understaffed, and then they bring in something very nuanced, something that, that transfers a lot of risk over. Staffing is still an issue. And I think they're so afraid, again, because they're not ready to be in the red, right? It goes back to the first thing. Mm-hmm. They're not ready to be in the red. So they're understaffing, thinking, oh, well, then I'll just bring people in as the volume ticks up. And while that's good, and I understand that scale, having one person or having a half FTE assigned to this is not doing the bank any good. And it's certainly not going to get easier as criminals really figure this out. We already know the U.S. is #1 in the world for fintech startups because we have the lowest ramp, meaning that they're not regulated. So that it transfers all that risk to the hyper-regulated entity, which is the bank partner. So I really think that's something that, if you're already understaffed, that needs to be brought up immediately, and don't try to add something else to it with an extra half FTE if you're going to get into BaaS.
And what do you think, Sandy? Are there any other points that you'd like to make there?
No, I totally agree with Sarah Beth. It's always coming down to staffing. I mean, it comes in every single consent order. It's always coming down to staffing. And it definitely has something to do with them being afraid to operate in the red, right? It's full-time employees, very high cost.
I think in addition to staffing, it's understanding how to dimension risk. And I think what we see, even from an AML perspective, is the type of risks you see with electronic payments and digital payments is very different than kind of traditional banking products, right? Like, for example, you're not going to see structuring as much because there's not a lot of cash in and cash out. So I think in addition to the staffing, it's the quality of staffing and the quality of tools, because the risks are completely different in this space. And then in my view, I mean, I know there's a lot of emphasis on staffing, and I do think we've kind of overreacted there, because I think the banks that do it well that I see, they're maybe bringing on one program at a time. And if you are just bringing on one program, you're controlling volume, you're controlling transaction amounts, you maybe could get away with one FTE, right? So it's like really dimensioning that risk and just making sure you understand your risk and then what is appropriate to control that risk.
Yeah, I agree. And so, Keith, we're going to now go over to you, but I want to talk about more technical nature of banking as a service. The last 6 to 12 months have proven that sponsor banks have to invest heavily in data mapping and architecture. As head of payments at Cross River, I'm curious, what's your opinion on what the minimum requirements are here?
Yeah, the minimum requirements are changing. The bar is being raised. We always expected our partners to have bank level compliance, but it's become very clear over the last 12 months, really, that the reliance model is not something that any bank should be comfortable with. The data should be in-house. Talk about middleware providers. That's not something that banks should rely on. So that means, in a pooled account within an FBO account, you should have visibility via subledgers to the individual partners, customers. So the fintech's customers, you need to be able to see that activity for that fintech customer, and you need to have that KYC or KYB information of the fintech's customers. That should be in-house, and not, you shouldn't rely on the fintech to provide that to you. So it's the getting the data in-house, and then obviously using that data to monitor the activity of the end user, the fintech's customer.
And Sandy, what do you think?
Keith covered it all right there. Just exactly what he said, bringing the data in-house and using it appropriately for the oversight. Any
other comments?
Yeah, I mean, I think that there's a lot of regulatory implications there too, because I think to Keith's point, the ledgering, we talked about FDIC insurance, and there is a world where these accounts are eligible for FDIC pass-through, but a lot of the requirements of whether that applies has to do with exactly that, making sure the account is titled properly, making sure that there's records and ledgering that the insured depository institution has access to. So a lot of those tactical points become really important, even for the protection and safety of the accounts themselves as it relates to FDIC pass-through.
Agreed. And I think, just to kind of piggyback on that, one of the benefits, besides what Sheetal just said and what Keith has talked about, is that once you do have that proper infrastructure in place, the data headers, essentially, you are able to actually bring that AML sanctions effectiveness monitoring in-house. If it's all, in one big pot of stew, it's going to be very hard to find any typologies. And it's going to be very hard as they graduate throughout their fintech program, right? If they're in a tiered type of approach where they collect minimum CIP through full CIP, it's going to be very hard as they go throughout that relationship if you don't have the correct account or that sub-ledger data tag on that customer, on the fintech's customer, to track them throughout their life cycle. And then that obviously has an impact on monitoring as well.
It's also going to help from a profitability perspective, right? The buzzword, maybe it's died out a little bit, was AI, and right before that, machine learning, right? Once you have this data in-house, you can be much more efficient in how to monitor this activity. There's tools out there, and then we're constantly getting better at scoring our alerts and using new technologies to find suspicious activity. So it helps from a efficiency and ultimately a profitability perspective too.
And with what's played out with Synapse and Evolve, and that resurfaced some business continuity and disaster recovery planning related issues. Sheila, you discussed it a little bit earlier on, but could you go into a little bit more detail on what you think is should be concerning and what should be top of mind?
Yeah, I mean, and I think this is a very logical kind of next step to what Keith and Sarah Beth were just talking about in terms of data visibility. Because I think if you think about what the trigger point was in the Synapse Evolve dispute, it was really Evolve losing visibility into that data. So a lot of it is going to come back to if you are using a third-party service provider or a technology partner, how are you as a bank, as a regulated financial institution, ensuring that you have access to all the data to make sure these are still operational and that you can resume business activities. So I think in the aftermath of Synapse Evolve, contingency planning is going to become even more important on the part of bank partners who are leveraging technology firms.
Anybody have some comments on the business continuity side and possibly having to, I know it's kind of, we don't know what we don't know, but what are some areas that you think would be beneficial for resolving this current crisis and possibly future ones?
I think from the fintech side, one of the things that, you know, I'm hoping more fintechs will do, because I think out of this issue with Evolve and Synapse, I've spoken to a lot of fintechs that put their, you know, heart and soul, their blood, sweat, and tears into the startup, and now they're back to ground zero. And I think a lot of times bank partners, you know, do the vetting of the fintechs, but fintechs really need to do the vetting of their bank partners. If your bank partner is not asking you, what are you doing for AML? Show me what your alerts look like. Show me what your dispositions look like. Show me the resumes of your folks on your AML and sanctions team. What are you doing for sanctions? If your bank partner is not asking you, the fintech, for this stuff, to me, that's a red flag for a fintech to go, wait, maybe I need to have a second bank partner. So there is a continuity from the fintech side. So I know that a lot of the people that are watching this are going to be on the bank side, but I think it's also good for the bank to be prepared that their fintech should be asking them very similar questions. Hey, why aren't you asking us this stuff? Because we also have to have a disaster recovery business continuity plan as a fintech.
Yeah. Well, I appreciate you adding in that extra bit of context. I think that this webinar was really supposed to be the highlights of what can go right and what can go wrong. I mean, at the end of the day, these types of business relationships will, some will do fantastic and some will unfortunately die off. And we can learn a lot from both sides, you know?
Yeah. Jeremy, one other point I wanted to make on this is kind of to Sarah Beth's point. These ideas of business continuity and disaster recovery, these are not new concepts, right? Every bank has kind of traditionally dealt with this. I think what's changing is we've traditionally looked at that in context of things like disasters or, you know, tornadoes hitting and there being outages. I think now we're thinking of this in terms of venture-backed companies that lose funding. And that's kind of what we see in the aftermath of Synapse, that I think it's going to change the standards of what we deem to be a disaster or a disruption.
Well, let's hope for the best. And I know that Ross is here now to usher us out, but I thank you everybody for joining me today. I want to give it back to Ross, but again, thanks everybody for joining us in this discussion, and looking forward to chatting some more about this topic in the future.
Here I come with the hook. Look out. No, great convo, everyone. Thank you so much for spending time with us today. And I'm sure folks on the line have enjoyed the chat as well. In about 5 minutes, for those on the line, you'll have your choice to join one of 3 sessions. The first, Chop, Stopping Pig Butchering Scams. You've got the second, 2024 Fin Crime Trends from LinkedIn's Top Voices in Risk and Compliance. And lastly, Unit 21's Rule Building Masterclass. And also, if you want to learn more about how Unit 21 powers AML compliance for sponsor banks and their fintechs, we got a great demo where you can learn how we help organizations of all sizes. It's available in our demo showcase area. And last but not least, wanted to do a quick plug. We're in the midst of a data gathering exercise for our 3rd annual State of Fraud and AML report. So we're seeking to make this research the most innovative finding yet, but we're unable to uncover these insights without people like you. So we really encourage everyone to help us contribute your insights, what you're seeing on the front lines when it comes to fraud and AML compliance. And your insights will really help power some cool reporting that we do down the line. So with that, a final thank you. Thank you again, Jeremy, Sandy, Sheetal, Sarah Beth, Keith, everyone on the line. Really appreciate your time. Hope you learned something new for folks who joined us, and hope you enjoy the rest of the virtual summit. Thanks, everyone.
Thanks.
Thank you.